Good to go.
Awesome. So good evening, traders, wherever it is that you're watching this presentation from. My name is Robert Mbogo, and with me is my colleague, Edwin.
Good evening.
Edwin, you can say hi.
Hi, everyone, and welcome to our session for today.
Yes, so pretty much today we have a great presentation for you guys. And we believe as traders, you really want to look at high probability trades whenever you're taking your trades, because we know like opportunities will always be presenting themselves in the market, but you must be able to filter the opportunities that come in. And the only way to do this is making sure that you have a way of identifying high probability setups. These are the setups that in most cases, they will play out almost 90% of the time. And this kind of prevents you from taking all trades that present themselves. So this is why like you must identify who you are. And that can only happen if you've already figured these filters into your trading system. So I will let Edwin continue the presentation and get to talk more about filtering trade setups.
All right. Thanks for the introduction, Robert. So as Robert has mentioned, today we are looking at how to filter trade setups. So as a trader, you need to identify the right scenario which would give you a high probable opportunity. So it therefore calls for a trader to know or to come up with a formula of filtering trades so that he can be able to know when to trade and when to avoid the market. So a trade setup refers to a set of conditions that needs to present itself in order to consider taking a trade. So it's upon certain events or certain triggers manifesting. So if, for example, you're a technical trader, you'd sort of have a checklist with different triggers, and it's upon those triggers happening. Once the market has presented the right conditions, that you'd know that that's the right time for you to take a trade. So a setup therefore provides a yardstick which traders can use to qualify potential trading opportunities. So it's sort of the best case scenario in the market. What kind of a picture would you want to have as a trader to know that this is the best time for me to consider taking a trade? So you therefore measure different market conditions to see whether it matches with the setup. And it's upon that happening that you then prepare to wait for the first trigger to happen so that you can take the trade. So you'd obviously have multiple triggers, and you need to have a clear picture of how those triggers would happen. So if, for example, these are precondition before you enter into a trade, then you need to wait for that to happen. So you need to know the criteria in terms of how those triggers would happen. So if there's a certain condition which has to happen first, then it needs to be clear so that you can know the order of events. So though no pattern or though no setup is 100%, then traders need to study and learn about the likely outcomes, as well as the point at which the pattern may become invalidated. So the best way is to first practice trading with that setup on the demo account. And you'll notice that the more times you trade on the demo account, upon identifying similar setups, the better it becomes. You almost develop a sixth sense in such a manner that you'd be able to know which setups offer the highest probability. So it calls for traders to practice before they replicate the same in their live accounts. So these are the things that you need to put into consideration when you're filtering your trade setups. The first thing is to know what type of a trader you are. So there are many types of traders. So we have a scalper. So a scalper is a trader who would enter into trades, hoping to hold those trades for a very short period of time. The other traders who would enter into a trade and be comfortable holding that trade within a period of 1 day. So those are called intraday traders. Then we also have swing traders, and these are traders who would hold a trade for a number of days, and they could, in some cases, have those trades running even to a week or two. Then we have a position trader, and a position trader is more of an investor, and such a trader is comfortable holding that trade for a long period of time. So the average period within which you hold open trades should guide you to know what kind of a trader you are. So depending on the level of comfort within which you're able to hold that trade, then you'd be in a better position to know what time frame is best for you to base your analysis and how long you'd be looking to hold that trade. Additionally, once you establish the amount of time you're willing to spend on trading, you will be able to identify the ideal timeframes and the ideal timeframes to frame your setup around. So again, the kind of a trader you are would sort of inform how you'll come up with that setup, because the time frame is quite key in determining how long you should expect that trade to mature. The second
Edwin,
thing is
on that note, yeah.
Yes.
There's this joke that is made, especially when you're coming in as a trader, is that, for example, if you're a firstborn, like most firstborns are very impatient, yeah.
Mm-hmm.
So when you're coming into the trade, then you'll at some point in time you'll have to realize what, for example, personally, I'm a firstborn, so I'm speaking
from
about
experience.
this from experience. It was hard for me to be a day trader or even a swing trader. So when starting out back in the day, I was just holding a position for just 30 minutes, 1 hour, and I'm out. Yeah.
Mm-hmm.
So slowly and slowly you get to learn so much about yourself, and this is the beauty about trading, is that it brings out another perspective that you've probably not thought about it. Yeah. And that is,
Mm-hmm.
how greedy you are, how patient you are. And this is where now, like, it helps you probably in identifying who are you impatient, then probably you'll want to stick to scalping as you grow your confidence, as you trust your analysis, as you trust your system, and then slowly and slowly maybe you can graduate to intraday or even swing or even a position trader later. So yeah,
okay.
I thought I should add on to that.
Yes. So where would you classify yourself in terms of
personally right now?
Yes.
I jungle between day trading and swing trading.
Okay.
So that's why I fall in. I've never tried position trading. Wow, no. I'm not ready and willing to hold a trade for more than a month. Yeah.
Yeah.
So yes. So I think it all comes down to swing trading. There are times it's quite effective. There are times you're in so much profit, and then the next time probably, especially if you don't know how to manage your trades, where you book profits along the way, at one point in time, you're probably 150 pips in profit. The next time you're minus 10. So, well, this again goes with experience. You must really get to know who you are and why is it that you're holding that trade. And if that trade gets into drawdown after being in profit for around 100 pips, how would you handle that situation? So there's a lot that comes into play when you're identifying yourself. And I think this is the real journey for traders, especially after you've identified your strategy. You've been back testing your strategy on demo, probably using the FX Pesa, the 10,000 USD account. Then now you're ready to come into live as you test out who you are. Then there's a lot that is at play, and that's where now the real learning curve comes into play.
That's true, Robert.
Yes,
I would equally classify myself to be a day trader stroke swing trader. So
awesome.
Yeah, that's why I lie as well.
It's all about knowing yourself, don't
Yeah,
you? For
you
the
have to know
guys who are
yourself.
listening,
Yeah.
for the guys who are listening, don't you dare follow your friends who say, hey, I'm a position trader, I'm a swing trader. No, this is a journey. And this is where, like in our facilities, Edwin in Nairobi, me here in Thika, Matthew in Nakuru, Samson in Eldoret, Kevin in Kitengela, and Zainab in Isli. They'll get to tell you some of these things and tell you that you shouldn't compare your trading journey with your friend. This is like any other career. You'll choose a path, and you at some point in time you'll have to go through certain curves here and there. But yeah, with the right guidance, you should be able to come out strong.
Yeah, and maybe to emphasize, there's no one correct way. It's just mastering your craft the way you know best. And once you have mastered and that method is able to give you consistency, then you're good to go.
That's the word. You've captured it pretty well, consistency.
Yeah.
So as long as you have that consistent number of pips coming in, by all means, stick to your strategy, stick to what works for you.
All right. Then moving on swiftly, the second thing that you need to put into consideration is to identify your preferred style of trading. You need to know which instruments are suitable based on your trading style and the type of market conditions that will complement that. So for example, will the setup be ideal on a trending market? Will you be taking counter trades along a trend, or will you be trying to trade price pullbacks? Will you trade breakouts along support and resistance? So you need to know the right conditions. So you will therefore need to ensure that the setups align with the right market conditions. Do you have something to add, Robert, in this regard?
Yes. Once again, you really need to identify those market conditions. In most cases, you'll find someone counter trending a trade, but they don't have the right targets. So in a trend, you are supposed to just go for just 20, 30 pips. You find yourself holding this position for even 50, 60 pips. Next thing you know, you've been wiped out, right? Because especially if you're not managing your trades properly, where like if price moves, let's say 20 pips, you've already locked in like 20 pips and probably moved your stop loss to break even. So counter trend trading is an area that really, when you're coming in as a trader, make sure that you identify the long-term trend. Make sure that you know where is the trend. Are we in consolidation? Is the market, the ranging aspect, or is it, really breaking out? So it's all about identifying the style and getting to know that. Be patient. If you focused on the trending, just go with the trending market. Don't force trades trying to counter trend trade so that you can get some 20-30 pips and end up losing out on the whole and having a drain on your capital.
Yeah, the other thing is the kind of instruments that you're trading, because again, different instruments have different levels of volatility. So for example, if you take pound pairs, so if you take a pair like GBP USD or GBP JPY.
Yeah, the beast.
Mostly pound pairs, like the ones that I've mentioned. The kind of movements that you're likely to expect on a busy day would go to the ups of 300 pips. That compared with a pair like Euro GBP, or even a pair like Aussie and Kiwi,
Kiwi.
or even Aussie Kiwi. So the kind of movements that you'd have with those pairs is quite different. Again, if you take commodities like gold and oil and silver, again, on a crazy day, you can have such assets moving to the ups of even 900s. I remember, I think it was a month or two ago, where we had a pretty significant move when I was in oil, and it placed trades both on UK oil and US oil. And that particular day, the market moved close to 1,000 pips.
Wow.
So you can imagine having entered a trade, but in the wrong direction for such an asset. So that can actually liquidate your account if you're not careful. So it's very key for a trader to master. You can actually master a few assets so that you'd be in a better position to know all the moves quite well.
I couldn't agree more, Edwin.
Yes. Then the third thing is to have the right combination of indicators. So you need to select the right set of tools in order to ensure that you have the right combination. So each technical indicator would serve a particular purpose. So there's no goodwill will come out of using indicators for the wrong tasks, or using several indicators with a similar function in a setup. So you need to understand the tools that comprise your setup quite well, so that you can be able to apply them well. Then each indicator has its own flows. So you therefore need to combine a set of indicators. So you can have like 2 or 3 indicators. Again, you don't need to clutter your chart with so many indicators. You just need to master indicators that complement each other, so that once you have the right setup, the flows of one indicator can be offset by the strength of the other indicators that you have combined in that setup. So for example, if you take a relative strength index oscillator, you might find that it might work well with Bollinger Bands or even moving averages. So here you'd combine a trend indicator with an oscillator because they function differently. So besides applying indicators, you can as well integrate some concepts. So for example, you can integrate the concept of support and resistance. So for example, if you prefer to trade breakouts, you might want to consider you might want to consider support and resistance concepts in your setup. Again, you can use candlestick patterns or the normal chart patterns to add more triggers or more reasons why you may want to get into a trade. So it all boils down to having the right knowledge and waiting for multiple reasons or convergence of reasons that would compel you to know that you have a high probable trade setup. The fourth thing is to keep abreast with fundamentals. So although technical analysis provides sufficient clues to know when to trade, it is important for a trader to keep tabs with what is happening in the market. So you can use an economic calendar to acquaint yourself with the events that are shipping that day or that week, so that in as much as your setups may be derived from technical analysis, you do not find yourself in a situation where you had a very nice setup based on your technical analysis, but since you had events, then those events offset that setup. So it's therefore necessary to take precaution so that you can have all sides covered before getting into a trade.
On this note, Edwin.
Yes.
It reminds me, it's first Friday of the month, the day after tomorrow.
Yes.
We have NFP coming up.
Yes.
So fundamentals, guys, make sure that your calendars are up to date. Make sure that you're looking at your calendars, and so that you're not caught off guard. Yeah, because really, like Edwin has pointed out, you could be so good in technical analysis, but if you're not putting into account the fundamental aspect also, then at some point in time, remember this topic is all about filtering trade setups and making sure you're looking at high probability trades. So for you to have a consistency in the high probability trades, you would want to consider fundamental analysis. That way, you're able to cater for trades, especially, if it's trade management, moving your stop loss at break even, booking your profits because you don't know how the news will be playing out. So it's key. It's key. Yeah, Edwin, as you've said.
Right. Then you also need to define the qualifying conditions. So once the trader has identified the right combination of tools, they need to define the ideal trade setup or the required scenario and the signal that will trigger the entry. So it's not just enough to know that you need to have A, B, and C happening, but you need to know the criteria. What is the first trigger that would help you to know that that movement that you're anticipating is beginning to happen? In other words, the ideal setup represents a set of preconditions that need to manifest to know that the potential opportunity has emerged. So these conditions act as filters to know if and when to place the trade. So once you understand those filters, you know the order in which those filters need to happen. And it's until those filters beginning to flow that you know that you can now enter into a trade. Then lastly, you need to gauge whether it will consistently yield sufficient risk to reward. So the trader needs to backtest the setup on the demo account in order to determine whether it will consistently yield sufficient risk to reward ratio. So it's not just enough having that setup or mastering that setup. Each setup is different. So in as much as the conditions are the same, each setup is different. So by observing the setup at play, you should be in a good position to know whether the risk that you're taking is worth the reward that you're targeting to get. So the rule of thumb is to have a minimum of reward to risk of 2:1 or risk to reward of 1:2. So if, for example, you're risking $1, you should at least be targeting to make $2 in return. Again, depending with the amount of capital that you have, you should ensure that if that trade does not move the way you had anticipated, if you incur a loss, your loss should not exceed between 1 to 3% based on the amount of capital that you have. So you should ensure that you use your capital optimally. Then the other thing is to choose your exit rules. So make a rule for take profit and stop loss, because a good entry, rather a good exit, is just as important as a good entry. So it's not just enough to find the right setup, but you have to ensure that you manage that trade quite well in order to maximize on the profit and to ensure that you exit that trade within a reasonable time. So those are some of the things that you need to put into consideration when you're filtering your opportunities. So at this point, I'll invite Robert just to give us an example of a setup and how he goes about finding trades using that setup.
Okay, thank you, Edwin.
Robert?
Thank you for the awesome presentation. So let me share my screen. Kindly enable screen sharing.
Shortly.
Yeah.
There you go.
Awesome. So I hope my screen is visible.
Yes.
Awesome. Now, this is a trade I took yesterday. I would want to capture some of the things Edwin has spoken about. And one of the things is that you must understand the kind of indicators you're using if you're an indie person. In this case, personally, I use the 5, 13, 50, 200, and the 800 EMA. Now, for you to find that high probability setup, then you must make sure that you have a confluence, as Edwin has pointed out. You don't just take a trade based off on just one parameter. So in this case, you guys can see those of us who know the neckline, retest of the neckline. This is an area I was looking at for this trade to come to, which was 69.50 basically. And we also know 50, for those of us who probably may understand the quarters theory as part of a trading strategy, is that 50 is a key level where market tends to test. So here we can see a reversal kind of a pattern. We can see the double top pattern. There was a break of structure, and then after that there was that retest that came back to this area. What we find quite significant is that right here we had an 800 EMA. This is the purple line over here. That is the EMA, and we can see it tended price acted was resisted at that point, but it also coincided now with the neckline, that retest of the neckline. And then now we can combine another confluence. Remember, now we've talked about the neckline, we've talked about the 800 EMA as acting as resistance. Now, for those of us who look at candlestick patterns, you can see what seems like here as an
evening star.
As an evening star, right? So our work was to wait for this pattern to come to completion, and then the retest of the same. And this is where now I got onto this currency at 69.37. So that pair has been dropping. There was a retest today, and then I anticipate the trade to play out that way. Now, if we go to higher time frames, we will see, let's say on the daily, you'll see a retest of the same here on the 50 EMA. I don't know whether you guys can see right here. We can see the blue one. the blue on
You
the
might
daily
perhaps want
acting
to,
as resistance here. That was the.
would you be in a position to maximize the chart?
Yeah, so
A bit.
screen yangu inakuaga tu.
Or just try to magnify and
yeah.
And push it to the left a bit.
Yeah. You know, once I got my eyes more, I'm having challenges with my eyes.
You're too young, Robert.
I don't know, too much screen time, but trading at times with the screen time, you tend
Yeah,
to.
that I agree. Especially with a white
with your
background.
eyes.
Yeah.
So it kind of messes you up. So anyway, we can see right here. Right here, you can see the now with the neckline retest, and then from that area we can see price is dropping. So this was a setup that I was looking at, and I looked at those confluences. Once again, if you look at this setup, you'll see areas where like the 200 EMA acted as resistance right here. You can see an area where also price acted as resistance around this area. So the 800 EMA tends to be stronger, especially on higher time frames. So this was the setup I was looking at, and I'm glad it has played out, and it confirms the filter aspect, where like you need to look at confluences of different parameters so that you're able to pick on those high probability trades, and only use things like the candlestick patterns as confirmations. Yeah, so probably that is something I was really looking at on this trade, and I'm glad that it panned out as per the projection.
Okay, this is a very nice setup. Where would you say your entry was? Along which candle?
That candle over here after the close of the evening star. So I waited for that retest to the 800 EMA, and then got in at 69.30, 0.6939.
So you'd say the first trigger was the formation of evening star along 800?
Actually, the first trigger was basically the retest of the neckline. We see the red line, yeah, 69.49, which is basically 69.50, sorry. And then my work was now to wait for price action to play out of that area. So when price action formed now the evening star, then it was just a matter of waiting for price to come back, retest the 800 EMA, which was around here. And then when that happened, then I knew when it was rejected at that area, I knew it was time to join the bears in the move. And you can see after that, you can see this momentum candle playing out big time. Today we had this retest, and then price looks like it will keep dropping up until you've pointed out that it's important that as traders we get to understand areas where our take profit and our stop loss levels are. If you look at this trade, I've already secured part of the profits. Means
you're trailing
tomorrow,
the trade.
No, sorry, on Friday. The trade. So just in case tomorrow, on Friday, we have the NFP going against me, then I already have secured some pips out of the whole move.
And this is very good because you can be able to maximize. So if that momentum is sustained, then it means that you can keep adjusting your stop loss so that you can maximize on that opportunity.
Yes, pretty much.
Yes, excellent.
So that's an example of how you filter your trades based on different parameters. Here we have the EMA, here we have price action purely, where we're looking at retest onto the neckline. And here we're also looking at candlestick patterns that we know act as reversal candles. And based on that, then you're able to pull the trigger on your trades because you're also in line with the trend, which is bearish.
Okay.
Yes, Edwin.
Excellent. So that's a pretty nice example for the week.
Yes.
Yes. So I think that's it for today. So I don't know whether you're able to view the questions from your side.
No.
Can take one or two.
No. I'm not able to view them.
Just 1 second. Let me see.
Yeah.
So we have one question here from Michael.
Okay.
So he's asking, how do you confirm and validate a trade setup?
Valid question. So like we said, Michael, when you're looking at your trades, you must make sure that you're looking at different parameters. You don't base off your trade analysis or even when you decide to enter on just one parameter, because this is you only increase your probability when you have different parameters lining up. So for example, in this case, we knew there was a retest that we had looked at opportunities for the retest to come into to retest the neckline. Then your work now was to look at it and say, you know what, trades are coming onto the neckline. Can we see a possible reversal candlestick pattern playing out? For example, we could have seen now the evening star engulfing also playing out, right? We could also have seen a pin bar playing out. So your work is to look at these price actions. And now what fortified this is because if you look at, let's say, the 800 DMA, it actually plays out very strongly in terms of acting as both profits and also stop loss levels, where you're making sure that you're protecting yourself just in case trades come to that level. So for me, it's making sure that you have those different parameters lining up, confluences, and then making sure that you know what they mean, basically. So if it's a reversal, you know what it means. And then from then on, you can just push your button and sell or buy based on whatever confluences you have. Edwin, maybe you have
and maybe
else?
just to add, as we had mentioned earlier, Michael, once you've identified a setup, is for example, you're the one who's coming up with that setup, it calls for you to retest that. You need to see similar setups happening. So once they happen, you try to take those trades. And once you have a number of trades which you have tested over time, of course, you need to do this on your demo account, then you can be able to tell the rate of success of that setup. Is that setup good enough for you to rely on long term to find trades to place on your live account? And maybe the last question before we close, Kelvin is asking what an evening star is. Maybe you can point out this evening star setup
Okay.
to have him understand what we mean by that.
Okay, so Kelvin, an evening star is basically a reversal candlestick pattern. It's a pattern that presents itself in areas of, let's say, resistance, for those of us who use support and resistance as part of your arsenals in trading. So anytime it presents itself at that area, you'll have a bullish candle, and then you'll have something forming like a doji, and then you'll have now in this case another bearish candle coming in, right? So that in itself presents itself as an evening star. The reverse is true. You have the morning star. It also presents itself where you're able to look at a bearish candle first, and then you have something like a doji, and then a bullish candle, and then in most cases that trade plays out, especially if it's in support levels, or in this case it's been held, let's say, by an EMA, or for the guys who use even the SMA. So these are just some of the patterns that you really need to look at.
All right. So I think that's pretty much it from my side. And with that, we come to the end of today's session, and we'd like to thank you all for finding time to attend this session. We look forward to having you in our future sessions. So before we close, we'd like to remind you to look out for tomorrow's session and Friday's session. So long as you've subscribed to our FX Pesa page on YouTube and set the notification bell on, you'll be in a position to get notification on your phone as to when that session is about to begin. Otherwise, that's it from us. Until next time.
Yeah, so Edwin, just to add on to something, we all know on Saturdays we normally have the A to Z workshops
Yes.
from 10 to 12. In Thika, this coming weekend, we are hosting something called the Pips and Brunch. This is where like traders get to meet, get to network, get to learn more about trading. And this time around, it will be happening in Thika. So kindly look at FX Pesa socials. You'll have a link, and they're looking for opportunities to learn more from other traders. I'll be hosting Rufus Kamau. Most of you know Rufus Kamau. He's been doing a pretty good job training guys on the especially newbies, new guys who are coming in to trade so that they become pro. So kindly go to the FX Pesa channel, have a look at Novice to Pro series. It's a series. I think right now we are in episode 5, if I'm not wrong.
Yes.
And so go out there, especially for the guys who are not able to attend these physical trainings in Kitengela, in Eastleigh, in Nairobi, here in Thika, Nakuru, Eldoret. Check out the Novice to Pro trading series. It covers everything that we cover in our classes. So that can give you a head start and get to know more about trading. Otherwise, for me, on my social media handles, you can follow me on Twitter, Facebook also. Get to interact with me, and I'll be glad to share that with you. Mambogo Jr. on Twitter and Mambogo Jr. also on Facebook.
You can equally find me on Twitter at Eddie Gituko. That's EDYGITUKU. You can as well follow me on Twitter using EW Gituko, at EW Gituko as well. And we can interact on that forum. So that's it. Until next time. So
awesome.
Have a pleasant evening and happy trading.
Yes, happy hunting, guys. Be careful. First month, beginning of a new month, there'll be some kind of a volatility, especially now we are coming out of the summer holiday. So protect your capital. Make sure that you're observing risk management to the core. Otherwise, cheers. Have a good one till next time.
All right.